We're exactly right before the takeoff of the first spike.
Hi, I'm Veronica Van Wollen, and I'm joined today with Kai Hoffman. Kai is the founder and CEO of Soar Financial Group. Soar is a group of companies, a conglomerate, you could say, and they specialize really in the mining industry, all the way from financing data to corporate communications and raising capital. For anyone who doesn't know Kai, you should, and we're going to dive into all of that and what makes Kai an expert in this space. So Kai, thank you so much for joining us today.
Veronica, thanks for having me on. Really, really appreciate it. Thank you.
Yeah, I'm jealous of your setup. You really have quite the. You look like a pro. You must do this before.
This is my COVID hobby, right? We started setting this up at the end of March, actually, last year, and we had to figure out how to communicate the story for our clients and telling people that we're not sitting on a beach sipping Mai Tais while COVID was raging, right? So that was the idea, and then I started watching more YouTube videos. I got really into it, and then that's sort of.
I love it.
Happened.
No, it's good. And it's for anyone that doesn't know who Kai is, maybe I'll start with a little bit of a background because Kai's usually on my side. So he's usually the one talking to public companies, talking to executives, really picking their brain and seeing what the opportunity is from an investor standpoint. Obviously, today we have the pleasure of speaking with Kai. And not only that, but we see this opportunity for all of your details and information for the mining space, specifically with your insight with Oren Inc. So I want to dive into that. And Kai has he has his finger on the pulse. And what I mean by that is one of your companies, Oren Inc., you collect data from all of the financing companies. I think you've been doing this since 2010. So your information on the sector and the trends that are happening in the resource sector specifically is really impressive. And you have a very micro focus. You really understand the micro details of what's happening. So, why don't we kind of start off with, for anyone that doesn't know who you are, talk to us about what Soar Financial Group is and who you are.
Yeah, fantastic. Really appreciate the opportunity. And the Soar Financial Group, as you said, is a conglomerate of three companies. You highlighted Soar Financial Partners, sort of what we're doing here, SF Online, SF Live. More on the corporate communication side, we had to innovate last year with COVID raging. We had to figure out a way to communicate the stories of our clients. That's been a focus, of course. SF Online, we just hosted it actually this morning as well. It's just a mini conference series we host. So we had to come up with new ideas. So that's the corporate communication side. Oren Inc., as you mentioned, I bought that company in 2016. We track all the financing data in the junior mining space, meaning companies with a market cap up to $1.5 billion and financings only up to $100 million, just to keep it relevant, right? So if you have larger financings, I think Lundin Group did a bigger one, it would just completely blow out our Oren Inc. index. That makes us a bit unique. And the index we come out every Monday shows how healthy the industry actually is. It ascribes a score every week to see how good we're doing or how well we're doing. And it's been doing well, I have to admit. So last year was fantastic, and we can dive into those numbers a little more. And on top of Oren Inc. and Soar Financial, we also run a small publishing house out of Germany where we just blog for companies and to get the word out in a non-aggressive, non-promotional way, just to create some visibility.
Yeah. No, that's great. And that's a good point, right? I know you are German, so you really know that market super well. And I think for any investors joining us here today who are watching, they're going to get a lot of information for you on the trends. And if you're not already a part of Oren Inc., I would highly recommend subscribe. It's a great place to see all of the financing data and any financings that are coming up. I want to first talk about Oren Inc. and the trends you're seeing. So 2020 was a weird year. It was up and down. The markets were very volatile. Obviously, COVID made things very different than what we normally see. And now leading into 2021, we're seeing very promising, groundwork for a strong commodity market. What are you seeing over the last kind of year and a bit with all of your data that you have?
Yeah, 2020 has been a fantastic year for junior mining. We raised almost as much money as in 2011. As you remember, that was an extremely frothy market. Mm-hmm. So we raised $5.5 billion on the junior end of the space or the spectrum, which is impressive. However, not as impressive as the average dollar amount raised per company. It's only $3.3 million. 2011, we're almost twice as high. So that makes still a big difference, meaning there's still a lot of smaller companies in this space that are sort of sucking on our teats, more or less. They're just sucking the blood out of the market and not really creating any shareholder value, because as you know, the bigger financings usually mean either construction or they mean bigger drill programs or even further development of projects, right? And we're not just seeing that just yet. So that's maybe one takeaway from 2020.
So if I understand that correctly, there's a lot more opportunity, a lot more room to grow because there hasn't been as much raised capital compared to 2011.
Fantastic. Yeah, exactly. So we've seen a lot of capital raised. So a lot of companies are spending money right now. They're drilling. They are trying to create shareholder value. But because of that activity, no drills are available in certain areas. Labs are massively backlogged. I spoke to a company today. They told me that their lab actually shipped samples to Laos from Canada, just because they have capacity there, right? So that's holding us back right now. That's maybe why the market is kind of flat, especially in the juniors. There's not a whole lot of excitement. Also, because of COVID, capacity at the TSX is constrained. We're not seeing so many listings as we might see. I know there's a few IPOs in the pipeline that are just waiting to happen. So,
right. I'm actually just pulling up the Oren Inc. index right now. So you mentioned this, you're taking a summary of all the financings and creating a little bit of an index. Talk to us a little bit about what you're seeing and what that means.
Yeah, so the Oren Inc. index, we started the year off slower. So last week's index was only 50 points, which is actually quite high if you look at 2016 or 18 and 19 in specifically. But it's led by one bigger financing because we weighed like the financings differently, and especially broker to bought deal financings get a very high rating because it shows us that the brokers are active and they can make fees, meaning the market is healthy enough so they can come back and actually feel confident enough to rake those fees in, right? So that's why there's a high value ascribed to that. And if you look at the index, you've seen a fantastic spike in the summer. We reached back the 2011 levels in terms of healthy or frothiness almost, right? We've seen a lot of activity. The gold price reacted well. There was a lot of excitement in the space, and that all tapered off over the fall, inching or moving towards the US election. We're still past the election now. We still have uncertainty in the market. It's going to be another week before the US or the White House is, or the keys to the White House are changing hands, right? So, and that's all weighing on us right now because the market doesn't know where things are going.
Right. Okay. So a lot of data. What does this mean for investors today? Like what should they be taking from this?
That the market has seen a good inflow of capital, right? So companies are working, and which is good, which is exciting to see because drilling, that's what we want to see. Like geophysics are great, like magnetic surveys, IP surveys, fantastic, but they don't create the shareholder value that you want to see. Like the explosive gains are created with drill interceptions, like successful turn intercepts. And that's what you want to see right now. And that's what probably a lot of investors are positioned for right now, because the market, if you look at it in general, it's pretty flat. There's not a lot of excitement going up or down. We're waiting for results. And that's what's sort of missing. If you want to position yourselves, find out which company is about to report. Sometimes it takes 2-3 months, like Fireweed Zinc. I think they've been waiting for 4 months now for drill results.
Is this a plug?
Right? No. It's just the companies. Like I know Brandon quite well, so we exchange ideas quite often. And he's like, Brandon, like, and he hears that not just from me. Like, when are we getting results?
Yeah,
right. He's like, I don't know. It's like it's been 4 months now, and that to a degree is ridiculous. But if you want to position yourself as an investor, well, now is the time maybe to get right in front of that. You can front run it. You didn't have debt. Like I had debt capital in the company for 4 months. Right? Because I've been waiting for results. Now you have the opportunity to position yourself.
I completely agree, because I've talked to quite a few companies here as part of URIC, and a lot of them are just waiting on assay results. So how I see it from an investor standpoint is, positioning. Now's a great time to position because these results are going to start coming out in 2021. So it's almost like all this backlog is going to create so much news flow. I don't know what that's going to be like, but in my opinion, I think this is a really unique opportunity to get positioned now because there's going to be all these results coming up quite a bit.
Yeah. I want to refer back to the Lazonde or Brent Cook curve, and we had him on the program this morning. That's why it's fresh in my mind. But we're exactly right before the takeoff of the first spike in price, right? We're right there with many, many companies that are just waiting for results. And that's a perfect sweet spot for investors to come in.
Yeah. So I guess investors shouldn't feel FOMO. They shouldn't feel like they lost the opportunity to get on board.
No, right now is to buy the lottery tickets, right? Now you have to buy them, do your homework. There's a lot of good information available. COVID made it possible. Like, as you can see, like we went all digital. We're producing content. Companies are more approachable than ever. And there's so much information available to do your due diligence, and investors should really leverage that.
Yeah, no, I agree with that. One thing I noticed actually as well as part of your data here is the flow through. I know it's the amount raised for, I am getting tongue tied here, but the amount raised for flow through was close to 4.6 billion. And looking at 2011, I think you reported that close to 8 billion. So not too far off, but there's still room to go. For anyone that doesn't know what flow through means, explain to investors what this capital is typically used for.
Yeah, it's a bit of an unfair advantage for the Canadians, right? It's a tax advantage, sort of, where companies can raise flow through often at a premium because the investors buying the flow through shares get tax deductions from their investment. Since the companies are non-revenue generating, they don't have anywhere to spend their tax, or they can't tax deduct. Right. So the investor gets to do that. And oftentimes, depending on the jurisdiction, you also get METC credits, mineral exploration tax credits, that you can add on to that. So sometimes the premium can be up to 80%. Right. And that's important for companies to dilute less, but it has to be very focused on exploration. You can't spend it for steak dinners and red wine. Right. It has to be exploration focused, whether it be geophysics or drilling. Right. And that's an advantage. And the number of, I do have to correct you, unfortunately, it's $4.6 billion ex flow through because it's only Canadian focused. It is roughly 800 million. I think it was a little over $800 million in flow through raised last year, which is still a tremendous amount.
I was going to say, I'm like, that seemed like a really big number. So I'm like, I've got to.
Yeah. And it's only available to Canadians.
Yeah.
Mostly. Right. So
very unique.
there's charity flow through, which is on top of flow through. That means that charity buys it, donates it, and somebody else buys it off of them. That can be international, and that can be an international investor, and that dictates another.
So probably that number, as well as all the financing dollars that we're going to see for 2021, I'm assuming that's all going to increase. There's still more money going into the sector.
Let's hope so. Really, let's. We don't know what's happening with the gold price. We're pretty much flat for the year right now. There's not much excitement in the gold space right now. We'll see what the stimulus does. Biden is supposed to speak tomorrow in terms of his stimulus package. Of course, as a resource investor, I'm looking for infrastructure spending. Mm-hmm. So let's just say that we stay at 1850. We should see a similar year, maybe a little less fewer dollars invested, but pretty much flat, right? If gold goes above $2,000, we're off to the races, and I'm sure we'll attract more Robinhood investors and other investors into this space, right?
I know it's funny, right? Like I think everyone now is a Robinhood trader if they have had access to Robinhood. Everyone's an online trader right now, so it's created a lot of activity in the markets. How are you seeing that kind of translate into like return of the bankers? What are the bankers and the brokers? How is that comparing to this retail influx?
It's interesting because a lot of brokers that I know as well, they worked on private deals in the last few years. They're all coming public now. I think we've seen Canarc come public today. That's been private for 4 years. I know a lot of brokers involved in that one. And that's been cooking behind the scenes, right? And you didn't see that too much. And now that is coming to fruition. So that is happening. Retail through Robinhood. And Robinhood is a problem here in Canada. You don't have access to it. I tried downloading it. It doesn't work. I know. Right? And there's only, I hope I'm not mistaken, but there's like 6 or 7 New York Stock Exchange listed gold companies that you can actually trade on Robinhood. I think it's Hecla, Pan American Silver, Corvus Gold, and 3 others, right? Don't quote me on the exact numbers. So having access to that is very, very difficult. So they probably have to buy the ETFs and other instruments to leverage gold or the gold miners. And maybe those companies, if you really want to invest, maybe that's a way to play. Just buy some ETFs that the Robinhood traders can buy and just wait.
Yeah, not a bad strategy, right? A safe strategy. Total number of deals. I think you mentioned this, but especially with the bankers and the brokers, I saw a lot in 2020. Was the number greater than previous years?
It was. It was actually higher than in 2011. Really? Which is, 1,667 closed financings in 2020. But then again, average deal size was lower than in 2011. Right. So 10 years ago. And that is a problem, as I said before. Right. So we're only at, let me just get you the exact number, $3.3 million in there it is, $3.3 million in 2020. And 2011, it was $5.5 million per deal. That's significant.
That's the average amount raised per company.
Exactly.
So that's almost half.
Yeah.
Wow,
right.
okay.
So it's still the highest number in 10 years that we had last year, but only by like a smidge, right? Like 2016, 2017, we're around 3.25. So it's just around that level. So I'd love to see that number increase. If we get closer to $4 million, we're seeing more mines being built. We're seeing more feasibility studies developed because they're capital intensive, right? So it's all going that direction. And of course, it might also mean, and I'm speculating here, that the majors are getting more active, investing into the junior space and might be buying 20% blocks in those companies.
Yeah, I was going to say, looking at these companies more seriously, like you alluded to.
Yes and no. They're spending more money on their own brownfields exploration, but they're not spending too much money on greenfields or joint ventures. Like, I'd love to see more. The majors will be producing, like the top 10 gold miners will be producing over $90 billion in free cash flow until 2024 if we stay at 1850 gold. That money has to go somewhere, right? Of course, they'll buy back some shares. Of course, they increase their dividend. But then third thing on the list, and most important to me as a junior mining investor, of course, is M&A or investments into joint ventures and exploration or in partnerships with juniors. And that's what I want to see more of. Because like, I'm not, it's like if you look at all the graphs and everybody's predicting a gold shortage in like 5 years, 10 years, and everybody's production scenarios dropping off and they got to replenish the pipeline. That's true. But there's no hurry for them to do so, right? But with that money in the burning holes in their pockets, maybe the investors will push them to grow again.
Maybe, right? And I think that leads in nicely to kind of sector trends that you're seeing. So obviously investors are seeing gold's really hot, copper's really hot, electrification. These are all kind of hot buzzwords. Are the numbers matching up with the hot buzzwords? What are you seeing from a sector trend perspective?
Yeah, it's true. We've seen, buzzword bingo played well, right? So gold, copper, obviously always number one, gold, no doubt. But copper has been picking up also by Mark Bristow, sort of fueling the fire by saying he wants more gold and copper in the portfolio, ideally. And they go well together at the bigger mines. They can come together. But also lithium and new battery materials. We've seen quite a bit of that. Not the biggest fan of lithium companies unless they have an offtake agreement with somebody, because every sandbox has a bit of lithium in it and some rare earths, right? So you got to be a little careful about that. But there is a spike there. Just yesterday, there was a Bloomberg article about Peter Thiel and other billionaires investing or venture and capitalists investing into Rocktech Lithium because they want to build a processing facility in Germany. And but that's sparking excitement, right? So that's bringing some new eyes back to the sector. Lithium, by the way, like back in, I think it was 2015, 2016, was one of the hotter trends. And they managed really to attract a younger crowd. They invested in new graphics, new media, and just new forms of communication that the gold companies, even today, still neglect.
I want to dive in a little bit into this ESG, CSR. We're hearing a lot of these buzzwords. What do these mean? Let's define that first for investors and then talk a little bit more about that.
Yeah, it's an interesting trend that we're seeing as well. And it comes down obviously from the majors and the big banks and the big funds demanding more and more clarity on that. And ESG, CSR, although ESG is sort of, or CSR went into ESG, right? So that sort of disappeared and now it's all ESG, environmental, social, and governance. It's important in terms of what is happening in the industry. How good are we in terms of educating? How are we paying attention to what's happening around us? I think that's a good buzzword, and it means a lot of different things. And for us, even in the junior space, it means lack of country and business model, like diversification, for example, as well. If I think I'm using Torex Gold here as an example because they're in Guerrero, they're a one mine operating company. They're lacking a bit in that category. Right. So as an investor, you could probably assume that they're looking elsewhere to diversify their portfolio. And that is something the big banks and the funds, they demand that, especially from producers. Right. Yeah. So it's not as elemental yet in the junior game, in the junior exploration space. I was just gonna say that. So it's tougher to check it, to control it. But I keep thinking maybe I'm a bit naive, and I probably am. Most companies that are listed on the TSX or TSX Venture or even CSE to a degree are being held accountable by shareholders. Especially, I'm thinking environmental, social, governance anyway. You got Glass Lewis, ISS looking over companies' shoulders more on the TSX and the TSX-V than the CSE. Unfortunately, we've seen some interesting stories there, but. It's our money and we can dictate the flow of funds. And if somebody finds out there's shady business going on somewhere in South America, you pull the money, you pull the plug, right? So it's like, I'm a bit naive in that regard. Of course, there's a lot being swept under the rug that we don't see. But just asking those questions in investor meetings or so, I think is quite essential. And how they plan to diversify, how are they doing? Like, and diversification is not just that country business model; it's also on the board, like who's involved. Talked to a company the other day. It's a South American company, but they're all a Peruvian board. And it's a TSX or a CSE listed company. Like, what's the point of that? There's no, and that's also diversification. That's governance, right? So that's a problem. And yeah, we've been looking at that as well.
I think it's a good point, right? Like investors There's so much to look at when you're considering an investment, depending on what your time horizon is. But this is just another thing to consider, especially like you said, with the more big board listed companies. It's not so much in the juniors. I don't think, if at all. I don't want to say something where I'm incorrect, but I'm seeing it only with the majors. Let's kind of talk a little bit about 2021 a little bit more. So exploration joint ventures. What is your thoughts on this for 2021?
As I said before, I'm hoping, like, they don't have a glass ball, but the majors have to spend a little more money. They have to build out their pipelines, right? They can't just be thinking next 12 months. And unfortunately, since they're all exchange listed, they're thinking quarter to quarter, most of them, right? So we got to build that pipeline. And a lot of them, or sorry, not a lot of them, but a couple of them have started joint ventures already. Royal Road, for example, has a couple good joint ventures with majors where they explore together. And there are others like Agnico, I think it was Agnico invested into Rupert Resources. And we're seeing those, but we need to see more. It's not enough. Like, I haven't seen Kinross do anything. Newmont has been fairly quiet from what I've been hearing. Freeport-McMoRan has been pulling out of deals. So that's a problem. And fortunately, there's the retail investor now and maybe a couple of generalist investors that are sort of filling that gap, the funding gap, but it's still not enough, right? And as you see, like, we're still at $3 billion below the 2011 levels in terms of fundraising. And that is problematic. You still have to fill that gap to actually get to a certain level.
Do you think we need to see more generalist investors come in? Like, are we still seeing only the mining specific investors?
It is tough. Like, I think the generalists want to come in, but and I don't blame them, but they're lazy, right? So meaning lazy investing is ETF investing, right? They don't want to do the homework. Like, Brent Cook gave us a 30-minute conversation or a talk today about how to pick junior mining companies. I don't see a lot of people doing that in that detail.
It's a lot of work.
Yes, right. And there are a lot of factors going into it. We said ESG and CSR, but then you start looking at drilling. What does it mean? Like, where are they? Is there even gold in that area? Are there social issues, right? So lazy investing is ETF investing, and that money doesn't flow directly into the companies. Right? It helps with volume, and ideally they can raise at a higher level because the volume increases the price. But that's future, like that's hopes and dreams, right? And because the money doesn't flow directly into the company, it doesn't help the company directly. And I see that as a bit of a problem.
With your lens and with your expertise, because you've been in the mining sector for a long time and you kind of understand the sector from the whole spectrum. What, in your opinion, should investors focus on, like really focus on, when it comes to considering an investment opportunity?
Good question. I don't want to repeat myself. That's why I say good question. I hate that term. I hate that phrase, right? Like, a lot of people say that in interviews, but I hate it. And I catch myself doing it as well. But I don't want to say
question because I repeated your answer. But I think what I'm really trying to get at is, you come at it from a totally different lens. So if we put on the Kai Hoffman lens, what should we look at when we're considering a company?
So he's like, and I don't want to repeat what everybody else says, but it's management. It's management, right? That's the first step. And you got to be really careful. Go on LinkedIn, see what the CEO does. If there's a gap, there's a gap in his CV on LinkedIn, wonder why, right? Like, he might have done something that wasn't ideal. Why not talk about it? Right? That's where it starts, right? Do you feel comfortable with them? There's as I said before, like, there's so many opportunities to look them in the eye more or less indirectly, right? And see how they're pitching. How excited are they? That would be the first one. And for me, I always go to the website. First thing I open is management board of directors, right? So, but if you're new to the space, that's kind of difficult because you don't see the interlinks behind them. So you got to put a lot of faith in them, right? So then next advice is management. Go with somebody who's done it before. Right? Maybe he's done it 2 or 3 times. Join him on the 4th endeavor because he knows what he's doing. He's got the network in the industry. He'll have the financial backing. So you won't get diluted to the yin yang at 5 cents, right? Maybe at $1 though, but that means usually later stage and more drilling and feasibility study and all of the good stuff, right? But those are the best tips I can give you at this point. Right?
I like that one about even looking at LinkedIn and seeing a gap. I didn't think about that, but I agree. Management is so important because they're the people that are going to drive the ship, right? And they need to be able to pivot quickly, think about plan B, C, D, and know what to do. Any management teams that are sticking out for you right now?
Good question. Yeah, there's a couple. Like, I've done a lot of interviews the last 12 months, right? So, and I'm just going to say a couple of company names. I like Nucor. In general, that makes a lot of sense. That company, they're in Ghana, so you got to be comfortable with Africa. But again, great team. They've done Newmarket. They sold it to Kirkland Lake. They've been involved in other deals. Calibra is one of them, right? So that's a company I'd be looking at. I like the Integra team. the way they're approaching it. Also, there's a bit of a younger team. They have a new approach to sort of presenting their material. The press releases are phenomenal. It's actually understandable, right? Even for the non-geological investor, right? So we can make sense of what they're actually doing. Those are two that stick out at the moment. Yeah, just top of my head.
Two that stick out. Yeah. And are you finding with the companies that you're working with, I want to talk a little bit about Soar Financial, a little bit of a plug for public companies that are looking for some help in that space, but are you focusing on a specific kind of like only gold companies or only copper companies? Like, tell us a little bit more about Soar Financial and the types of companies that you work with.
Yeah. No, as I said before, like we're not too keen on the battery metal space.
Right, okay.
We have one client. They're more of a high purity alumina space, so that's a bit different because you can use it in batteries, but the original idea was LEDs, right? Because I say if you don't have an offtake agreement, it's not worth much, right? So I'm not too excited about that space, but in general, it's gold, silver, copper. And one thing, we like to see things to the end. So we have long-lasting relationships with our clients, mostly in the gold and silver space right now. We just added a copper gold client. Really excited to be working with them. They're in Quebec. Lots of potential, in my opinion. So always, grain of salt and all that stuff. So
I want to say rank your favorite client, but I don't think we'll get into that.
Oh, that's unfair.
We don't want to get into
I love all my children equally.
I was just going to say, right? No, completely. Okay, so that's Soar Financial. Oren Inc. Investors is a really, insightful website for investors to get their financing data. How can investors, what should they do? Should they go to Oren Inc. and sign up? Like, what's kind of the call to action here for Oren Inc. for investors?
Yeah, call to action is follow us on Twitter at Oren Inc. or go to the website oreninc.com, sign up for the newsletter. We're sending out weekly updates of the index, and you can see the financings being listed there as well. Also at Soar Financial, that's where we live tweet every day, almost every day. With interviews, we go live. That's maybe one thing nobody else does is we're live interviewing companies on Twitter. We do live stream, and then record it and put it on YouTube later on. But that makes us a bit different because you can see exactly how the CEO is reacting. It's not cut, it's not edited, it's genuine. And that's really important as well. So at Soar Financial, follow us there. And that's the main channel I'm personally using right now to also voice my opinions and stuff. Oren Inc. as well, but that's more on the financing side. I'm more active personally on the Soar Financial channel. Okay,
so at Soar Financial. And that's actually a good point. I like how you highlight that. You're doing live recordings. So if a CEO messes up, investors are going to see that right away. You can't cut that out. And I think that would be a good judge of character to your point of, getting to understand management teams. It's a little bit harder right now because we can't travel as much. We're not on the usual conference circuit. But this way you can see how an investor is reacting to maybe some challenging questions. And I don't know, are investors able to actually ask you questions during those live interviews?
Yeah, we originally started, and we still do it, is that we assign specific hashtags. Usually it's hashtag ask company ticker. Right. So it's usually six letters or ask XYZ, right? That's usually the hashtag. And then company or investors can send in questions right away and we'll see them. Yeah.
I love that. So any investors out there, if you want to, ask some tough questions, that might be a good way to do that. We talked about a lot, and I kind of want to bring it all back together and leave investors with a good kind of summary of the main takeaway points since we're getting close to our time here. Main takeaway points. What do you want investors to know about the trends you're seeing, where we're at in the market, and what they can expect, and how they should use that information to make data-driven investment decisions?
Yeah, we're at a fantastic spot in the market right now for junior mining investors. As I said before, we raised a lot of money last year. We're still waiting for a lot of results to come out. So we are it's a catalyst-rich environment right now. So you can actually choose your stock. You can pretty much throw a dart against the wall and you'd probably hit a good pick. It's a bit frustrating for me as I've tried, even with the companies we work with, we try to work with quality clients. But as you know, tight floats all boats, right? But it's a perfect environment. Yes, gold is at 1850. It's quite volatile. Bitcoin is even more volatile. So I don't want to hear that argument, right?
We won't go there,
right? But no, it's great. And as I said before, we're just at the beginning of the first uptick in the Lassonde curve. That's where you want to be as a junior mining investor. Of course, you have your long-term horizon. That uptick doesn't make a lot of sense because you just keep the stock. But if you're more of a trader, more of a speculator in this space, that's exactly the time you want to jump into the market because there are so many catalysts waiting in form of drill results and others. Also, as you asked me for 2021 outlook, the majors will have to do something. Mm-hmm. If it's not in the first half of the year, it's definitely the second half. We'll see more exploration joint ventures, mergers and acquisitions. Agnico just bought TMAC. Stuff is happening.
So stuff is happening. It's not too late to get involved. You can still position. What I suggest, for investors is take a look at Soar Financial. Maybe some of those companies that you're working with are a good start for investors to take a look at and look at some new opportunities to add to their portfolio. I think we're going to leave it at that then, Kai. I want to thank you again for joining us, joining our investors here, any companies joining or tuning in, and any other viewers that are getting to know the mining sector and where we're at here for 2021. Again, Kai Hoffman is the CEO and founder of Soar Financial Group. Check them out. Follow them on Twitter and also take a look at Oren Inc. Kai, thanks again for joining us.
Veronica, thanks for having me. It was great to be back. This is my 10th VRIC virtual this year.
Oh, wow.
Right? So the idea of Soar Financial was actually born 10 years ago at the Vancouver Resource Investment Conference. So it's a bit sentimental. I'm a bit sentimental.
I didn't realize we're celebrating our anniversary here. We should be cheersing with Mai Tais, right?
Oh, we wish we could.
We'll save it for next year's conference.
Perfect.
All right. Take it easy.
Take care.